Good day traders, it's Simon again. In this video I'll try and explain the main 6 indicators that we use, that we offer to help you perfect your trading. They could be an add-on to your already established system or methodology, or could be you could use them as they are from scratch. Going through the process, you have to learn how they work. Basically, what I will do in these videos, I will try and explain every single indicator by itself alone, starting with the volume-based indicators, which are the volume profile, sell indicator, power lines, and we have a few more. It is a very important subject because if I explain to you starting with volume profile, then you should be able to learn how to read it, to use it, but it doesn't end there because now the next indicators will help you confirm, which is important. The 3 main steps that I follow in teaching, or you should be following as a trader, are these things: anticipate, confirm, execute. You have to anticipate the next move. You have to be able to confirm your trade before you pull the trigger, and you have to be able to execute with a certain um, trading management that you choose. Moving forward, I'll be able to teach you my trading management. You can adapt to it, you can choose it, you can change it, up to you. Let me explain the first indicator and move on. Here we have the main indicator, volume profile study. With SierraCharts, we call them studies. You can call them indicators, up to you, but volume profile study for SierraCharts. In my previous video, telling you about volume profile and exactly how it works in terms of how it accumulates. The title is "What is volume profile?" So far you understood how the volume accumulates. In this video I'll try and give you some examples and show you how important it is to use this particular indicator for anticipating the trade. Now, there is anticipation and there's confirmation and there's execution. We talked about that in the previous slide. You have to understand volume profile is not a tool for you to confirm the trade. It's a tool for you to anticipate the next move. If you see, this is a SPX 500 in the CFDs market. I also have examples for USD CAD. I have examples on silver. I have examples, for example, here on pound. But let's stick with one thing for now. SPX 500. You notice how the volume profile at this level here at the bottom, after it broke into it, it came down fast into the next level, which is the rejection level. So anytime you have low volume, the market doesn't like it. Either will try and cover it quickly to go to the next one, or reverse. Now, you notice how we had power lines lining up here. This is the next subject we'll talk about, which is confirmation, how to use power lines, how to use other indicators too. Point being, folks, once you have this indicator installed, you will have a lot of options to understand where the market is going, what is your next step, and what is your target, because it's all into the continuation versus rejection zones. Now, bear with me, I'll explain some more in details, but let's see the NASDAQ, which has started bouncing down just right now, and I was expecting this to bounce down. This is the NASDAQ NAS 100 in the CFD market, equivalent to NASDAQ futures market. This is the weekly chart. If you notice how the weekly chart broke the 61% or 62% in Fibonacci, and Fibonacci is part of the free tools that you can get with SierraChart, which is explained in the previous videos. I added my 78% or 76% level, which it touched, but that was also combined with an entry to the next volume profile level. If I show you this on a smaller chart, on 1-day profile, you notice how that percentage, the 78 or 76% of you choose 78 or 76. I choose 78 because it's also a Fibonacci retracement that I like. You can choose 76 because it's more accurate. But you notice how the market came to it, not only because it was 76 78% or 76%. It's also the entrance into the next level of volume profile. If you see this, this is the next entrance to the next volume profile. So let me grab a pencil if I can. Here's a pen if I can use it. Here's a continuation zone. Here's a rejection zone. Here's a continuation zone, etc. So this is considered a continuation zone. This is also a continuation zone, but it's a valley. It's not a belly. So it's also a continuation zone between here and here. The market moves, okay? And we have another continuation zone. We have another rejection zone, but it is a continuation. By rejection, I mean once we get into this area, I let it go. If there's and this is better for scalping this area, because if there's a minor resistance here, you get out, because this area might have a resistance according to whatever whatever programs you have or systems you have or indicators you have. This could be an indication for you to get out. Same thing here. Same thing here. See, if you pay attention closely, this is a continuation zone, a small one. There's a rejection zone and there's another continuation zone, so on and so forth. How do I use this? How do I use this in a little bit more detail? Let me actually go back to the main sizing and you will see how beautiful the whole thing looks. Same thing goes with SPX 500. You notice how the um, market touched the top of the rejection zone and it is now bouncing back down. This is on a weekly, so it doesn't show the bounce much, but if I go to a 987 tick chart, you notice the bounce, which coincided with different confirmations, which we will talk about earlier. Now, 60-minute chart on SPX 500, same idea. Okay, so there's a volume profile that will give you the roadmap on what's going on and what's next. This is the Dow US 30. See how on the weekly chart, how we touched into a rejection zone. And if I could look at a smaller chart, notice how it actually bounced from here, from this rejection zone. I don't know if you pay attention, if you can see it clearly, but if I draw my Fibonacci, let's draw a Fibonacci. See if you're a Fibonacci trader, and I'm doing Fibonacci's because my next example will be about Fibonacci's, and see if you could trade it. Notice the 62% that coincided with this. Let's see if I have any other interesting indicators. See these indicators, we'll talk about them after. The power lines, the DRLs, all of which will help you achieve what you want to achieve with more accuracy. Now let me give you an example of how I trade this, visual example. How I trade it, how I look at it, and what I want to convey to you. This is a drawing app. We're all familiar with it. Okay. Let me give you some examples. Let's assume you are, again, simplest thing to do is to assume that you are a Fibonacci trader. So the market is going up, 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 up. You're looking for a long, and you're looking for a retracement before the long. And the best example is you're doing Fibonacci. You could choose any other indicators that are, they call them, most likely they are lagging indicators. But let's assume you're using Fibonacci's. I have a lot of members, they use Fibonacci's. I look at them sometimes, but again, they are not my primary indicators. My primary indicator for anticipating is the volume profile. Let's assume you have Fibonacci's. You have a level here, 23% or 38%, 50%, 62%, etc. Okay, that's just for an example. And the market comes back up, comes back down. This is your trigger for trading. Let's say 30 points or 30 pips stop. You get in the trade without any confirmations because maybe this is how you were taught to trade. The market comes back down, takes your stop, goes up, and then comes back down to the 50%. This is your 50%, which is also something very powerful in cases. But again, you take the trade, it stops you out, it goes up, you say, okay, now you have two stops. Now it goes up, you say maybe it's going to go up because it's a retracement, it's an uptrend. You take the trade, you get some points in favor. You say, okay, no, I lost twice, so I need to hold on. Comes back down, and now third trade, you say, no, I'm not going to trade it. You're trigger shy. It goes up and then it goes massively up. You missed it. Now this is a typical trading uh, execution. Let me show you how you should be looking at it, since you know volume profile and you are using it. I'm assuming you're using it the proper way. So these are the three levels that you picked. However, I'm looking at volume profile, but I have different ideas. So I remember I showed you earlier continuation versus rejection zones. I have three zones. One of them is like this. This is a full continuation zone. Let's assume this is an hourly chart or even 30-minute chart. And the other one is like this, right? Or even maybe lower, right? So we have this and this, and we have another one that's above it. You get the point. So this is a continuation zone. Let's call it C. C for continuation, C for continuation, C for continuation. This is easier visually, but once you get into the actual volume profile, there will be setting, there will be a period of or a period of time that you have to learn how to set up these things, which is easy, and with the support, with help, we can help you as well. But the market goes up to this rejection. This is a rejection zone, R. This is a rejection zone, R. So the market goes up to the rejection zone. You decide, for me, it will be a short, but similar to what I showed you on NASDAQ earlier. Then the market starts coming back down. Now, you took the trade here, long, remember. Now, knowing that this was a continuation zone, that the market is going to come back all the way to this continuation zone, we'll cover it. Will you have taken the trade? Of course no. You would wait. You would wait. You would wait. You would wait. Now, what about here? Would you have taken the trade here? Of course not. Not. No. Now the market continues down, continues down, continues down. What about here? Remember, it goes below the 68% or 62% or whatever this retracement is. Would you have taken it this time? Again, we are not taking the trade. We are just anticipating the next move. Anticipation. So yes, this is where I'm willing to pull the trigger. Now there's a very important matter here, is your stop loss. What is your stop? What is your stop? Where is your stop? Most people, they have a random stop of, let's say, 15 pips, 30 pips. In this case, even your stop loss is already established. How? Let's assume that this is a volume profile level. Once we get into this volume profile level by about a little percentage, it's going to continue all the way down. So you need to have a stop loss in a way that if it goes below this level, then you need to kill the trade. So your stop loss is not going to be random 30 pips here. It's going to be somewhere right here. You understand? This is your stop loss. So now you reduce, not only you eliminated the risk of getting stopped out twice. Now you eliminated about half of your risk with your typical stop loss value. If you used to 30 pips, now you reduce it to whatever is whatever the price is here. And from here, you take the trade. After, of course, this is only anticipation. We have other ways to confirm, which I will show you in the next slides. But this is how you would be treating your trades. And the market goes up, you take the trade. Oops, wrong color. You take the trade, it goes up in your favor. You take your first target. Your stop loss is here. Move it higher according to the next smart stop idea, which also it's part of the teaching as well moving forward. Okay, so that way you eliminated the trade. Typically, what I teach is trading with three contracts. So if you have three contracts, you take the first target T1 at two contracts. So if you made target one, you made 15 pips, you already up 30 pips. If your stop loss is 20 pips in risk and you get stopped out on the runner, you're still making 10 pips, right? You get the point. This is how and of course we have other indicators, we'll show you the targets, etc. So for now, in a nutshell, this is how you should be treating volume profile. Remember on the NASDAQ, on the weekly, I showed you the rejection, on the daily as well, the rejection, on the hourly. Now let's see what stopped it. Now it was coming down, the NASDAQ was coming down, and it got stopped moved up for retracement. What do you think stopped it as a retracement going up? You see the volume profile, the bottom of this area volume profile combined with other indicators that show you rejection. So this would have been your target one, or maybe completely exit if you don't like the to keep a runner. Okay, if on a 15-minute, same idea. Look at what stopped, what made it stop. Let me make it a bit more smooth. You see how the rejection zone right at the bottom here? You see it? Let me make it clear. See the rejection zone? Okay. So for this video, I think this is enough information. Let's move on to the next ones. Hopefully, at the end of this, at the end of the series, we'll have a better idea of what we offer and the power of our indicators.